what I thought I'd try to do is just outline sort of where we're going and what we want to do. And what we started with doing was when I got the call from Patrick and Sophia a couple of months ago, they said, "Gosh, why don't you maybe you could maybe define what investor education, investor training, financial literacy, if you could maybe define those terms. Just start at the very beginning, just defining it." So I launched into that. I had been a visiting professor at the University of Michigan and used their resources and used the resources at the New York Law School to define just basically the basic terms that we use. And guess what I found? There's not one. Here's the latest academic journal. This is from this past month. It's from the Family and Consumer Sciences Research Journal. And by the way, you'll get sites to all these, and you can click links when you get the PowerPoint deck. But basically, let me read you the relevant sentences from this research, peer-reviewed article with respect to these terms that we all use. Here it is. A search for, quote, financial education yielded 1,220,000,000 results, showing that the definitions of financial education, financial knowledge, and financial literacy are used almost interchangeably. Therefore, the goal of the paper is to integrate dialogue about the meaning of the terms and their usage among educators, practitioners, and researchers to relieve the lack of clarity. Implications are presented for research, training, and intervention programs. So again, there's a lack of clarity and understanding as to what those terms mean. So I guess the takeaway, the teaching point for that would be this, is that if one has responsibility for one of these areas, and in dealing with what area you're responsible for, and as it's defined, it's probably a good idea to make sure you and your boss, or you and your regulatory agency, you and your jurisdiction are on the same page. That when I say financial literacy, do you mean this or do you mean that? What exactly do you mean by financial education? What's the distinguishing feature between the terms? Well, having said all that, let me see if I can, taking this paper, speaking with others in academia, maybe come up with just a few quick definitions for which, and again, I'm going to try to spend maybe 20, 25 minutes speaking, and then make sure everyone has 5 or 10 minutes to ask questions, or more, maybe even more important, to state your point. Because I know that today I'll say many things, I hope, that will be controversial and that will excite some discussion. So let me try my best, after having done this, to give you some terms that the definitions that I would use for some of these terms. First, financial education. Maybe that's the umbrella. Maybe that's the big picture, the process that includes elements of information, education, and advice. Maybe financial knowledge, a stock of knowledge, basically information that's in your head. Financial knowledge, what's in your head? I understand the rules of football, American football. Now, I understand football intellectually in my mind, but I really, and you can look at me and tell this, involves the ability and the confidence to apply that knowledge. I don't have that. I'm not a football player. So if that's financial knowledge, if that's financial literacy, is that the definition that you accept? If you say, no, I don't accept that, I define it this way, that way, well, that's fine, because like I said, there are billions of definitions out there concerning these terms, and a need to, at least within one's own agency, I think, to come to clarity and to come to agreement as to those terms. Now, one problem here, financial literacy leads to personal financial behaviors, which in turn has an impact on financial well-being. I don't know about that. That's what the literacy talks about. That's what the literature talks about. But just because one has knowledge and literacy, does that mean that you're going to lead to personal financial behaviors that are positive? Certainly that's the goal and that's the outcome. Where's the evidence that shows that? Financial capability takes in everything above, plus provides a regulatory framework to ensure that one has a level playing field. So if you were to put it all together, I guess if schematically, this is the way I would sort of look at it. Again, everyone has their own view, as I've said now several times, that financial knowledge, okay, I got it in my head, leads me to being able to apply, I hope, financial literacy, gives me financial capability, which is basically everything said, and hopefully that will lead to good financial decisions and behavior, but I don't know. At least you know what you're doing. Whether or not when you retire in the U.S., do you take the lump sum or do you take the annuity? Well, if I look 50 years from now and know the date that I died, I guess I will die 50 years. Well, maybe make it 100 years. I'm going to be optimistic. Then I will clearly know what I should have done. I understand the terms. I know what an annuity is. I know what compounding. I know this. I know that. But it's an element of, how shall I say it, risk, gamble. Everything is in life, as we all know. Okay, so again, when you get the deck, you can. These are the links to two articles I think that are really good on this. If you want to go into more detail from an academic perspective, there they are. I offer those to you. Well, let me take the next step, which is really looking at what we know about financial literacy, financial behavior, this entire area. What we already know is that people don't do well in this. They don't understand. They don't have knowledge. They make bad decisions. Many times we find investors that do what? Gosh, many times we all have done. Buy high and sell low. Exactly the opposite. So that's pretty much understood, but what are some other things that are going on out there, consistent with the topic that I'm presenting on, that would lead to a barrier to making good financial decisions? What's the data with respect to that, with respect to barriers? And then what actually works? I want to make a few comments about that. And then what's some of the content out there that's sort of, I think, innovative, new, catchy, whatever. So again, within the next 15 minutes, I'm going to try to push through that very quickly. When I say push through that, we're talking about the data out there. No need to try to even do a statistics class, but the data I'm going to be using all comes from the Gallup poll. Everyone has their favorite poll, that's fine, but the main thing is this data is based on a random sample. And the key point with a random sample, again, many here know much more about this than I know, but can state with these polls 95% confidence that this is the number. The entire population, here is a random sampling, and with 95% confidence, this is the number, plus or minus 1%, 2%, 3%. Again, you'll have the link, and you can look at that. A lot of good data out there, a lot of data that's really not that good because it's based on surveys. We went to 500 people and they said this. We went to 10,000 people and they said that. Well, who cares what the 10,000 people said if it's not a random sample? You cannot extrapolate that data to the larger population. You cannot make public policy when you have data that's not based on a random sample that can be statistically and justifiably randomized to the entire population. So let's take at least the first two from Gallup poll. Again, you'll have the links. With 95% confidence, this is the answer. Economic confidence worldwide, 2012 versus 2013. If you look at the different regions of the world, where does, well, let's just take Europe, fit in. Negative, the lowest. Again, you can look at the data here as to how it was determined. What's your confidence in the economy? Where do you think things are going? And relative to the different regions of the world, you see, unfortunately, the European Union, minus 35%. The numbers go from minus 100 to plus 100. Minuses are bad, pluses are good. Minus 35, 2012, minus 36, 2013. You can see it there. So when we talk about financial education and wanting to make wise and prudent investment decisions, how confident are people within your region with respect to the economy? Speaking of with their respect to the economy, what's their confidence in banks? 124 countries in 2013, and the change from 2012, there you see the least, 11%, Cyprus and Spain. And I'm saying this with 95% confidence, plus or minus 3%. It's not going to be higher than 15%. That's it. That's the answer. I say that again, statistically, that's what we mean by random sampling. 95%, I'm sure of that by 95%. Only way to really know is to test everybody, but that's impossible. So again, we talk about financial education and wanting people and getting people to invest and do that and take action. And where am I going to go? Well, I go to the bank. Well, will I go to the bank? In these countries. Take a look at it. 124 countries. Where does your jurisdiction fall in this scheme? Speaking of confidence, what about, gosh, do I want to go to a place that's ethical or unethical? My inclination is to go to a place that's ethical. So what is the ethical view of the banking industry? How would people in your jurisdiction answer this question? And we can put your country right here, but I can tell you what the answer is for the United States. In the United States, the answer is, there it is, right below auto mechanics. So I'm going to go have a brake job done, and I already don't trust the auto mechanic. And the next stop I'm going to is a person I trust even less, which is my local banker. I trust the guy doing the brake job better than the banker. Barriers to financial education? Barriers to making things work? Yeah, start with the basics. Before we even get to the go, here's the problem. How's the industry doing? Not much better. Banking, wait, the numbers are supposed to be on the right, not the left. It's supposed to be positive, not negative. Now, a more recent poll was done last 2 weeks. You can look at it here. It finally went positive. But take a look at the trend. Take a look at the trend. Again, you got links on all this. There you go. Other data. This I found to be really interesting. Now, this is U.S.-centric. This is U.S. This is the U.S. First two you saw were the global. U.S. What do people want to do? Do they want to invest? And if they want to invest, what do they want? Secure, even if growth is low, or do they want growth and take some risk? What's the answer to that? What would people in your jurisdiction? I mean, forget the product. Do they want to I take safety and security, or I take a little risk and I'll go for more growth? The classic question on risk. How do people end up on that question? According to the Gallup poll, 95% confidence. Here's what it is in the U.S. They want security, even if the growth potential is low. Two ways of looking at this data. This is all investors, and these are retired investors. Retired investors, man, they don't want to have anything to do with risk. So says 8 out of 10. Two ways of looking at this. Number one, a regulator perspective saying, gosh, how were you able, Mr. Banker, to convince all these people to invest in these products when they came to you, statistically not wanting to take on additional risk? Second way of looking at this, gosh, you're very naive, investor. You really do need investor education. You need to get out there and you need to take some risk. You need to get invested. Otherwise, you're not going to have enough for retirement. No wonder you're not saving properly. No wonder you can't prepare for the future with this data. So two ways of looking at this and two ways of this data cutting. Look at the poll, come to your own conclusion. I'm giving you my version, but you should come to your own independent conclusion. And again, this is U.S. The question is, what's the data in your country? How does this compare? Here's a baseline. Baseline, this is what it is in the U.S. It's not a baseline. It's just what it is, But what is it for you? All right, now we'll quickly go through some other data with spend less time. They need to own stock. Well, do you own stock? What's the answer to that in the U.S.? Over time? Yes? No. 44%. You can see how it changes. Next question. If you had $1,000 to spend, would you go immediately and spend it in the stock market? Would you invest it? What do you think people would say in your jurisdiction? Well, here's what they said here. They think, hey, good idea, 46. Bad idea, 50%. So again, regulatory perspective, anyone who invests in stock, statistically, half of them are coming in saying, hey, wait a minute. Let me point out, I failed in my push ahead. I want to make out one thing here. The people that were sampled here, these were people that had $10,000. So we're not even talking about the people that didn't have money to invest. These are people that had, according to the survey, I have $10,000 of investable income. Now what do you want to do with it? So we're not even talking about that large percentage of the population in the U.S. that don't have $10,000. We're talking about people that really do have even a tiny bit of disposable income in today's standards. See how it changes over time, of course. How would you rate your financial situation today? Gosh, excellent, good, only fair, or poor. 48% say they're doing good. Again, maybe things aren't as bad as we think, or people are naive. I would tend towards the latter. But this is what the Gallup poll says with 95% confidence with respect to the outcomes over a historical trend. Great data, all free, all online. Are you going to retire comfortably? Gosh, today, again, this is all data from since we met last time, 2014, 50% of the American public think they're going to retire comfortably. They may be living in la-la land. They may not know what they're talking about, but that's what they think. And that's fine. Freedom. Gosh, you have more than enough money to do what you want to do. What's your answer to that question? I'll tell you what my answer is. From the day I was born, the answer was no. Interesting. As you get older, you have more than enough money. Here's the 88 to 91-year-olds, 55%. They have more than enough money. Anyway, interesting with respect to baby boomers, interesting with respect to where one is in life. This isn't saying they do have, this is their view. This is what they're saying. Is this a view that needs education? Not saying this is the right view, not saying this is good, this just happens to be their view. And part of investor education is alerting people, not to what you do, but just, hey, these are the realities, some givens. Pushing ahead, what seems to work? This is the same slide I used last year. I haven't changed. I'm still the same. There are things that work and there are things that don't seem to work. A lot of things that don't seem to work, but there's things that do work. There are things that do work. There are programs that work. We'll at least show those to you. But certainly direct one-on-one assistance. Going back to what the chairman said, you go to the doctor. I don't want to go to med school to go that. You go to a professional. Well, if you go to a professional, who's that? Investment advisor, banker, broker-dealer, whatever the term is within your jurisdiction, financial professional, whatever the term is. But show me a program that works. Well, one is the U.S. Army. We'll talk more about this during the session when we have the open session. But basically, hey, they did a program. They brought in 82,000 trainees, gave them financial information, gave them an 8-hour program. Long story short, in 2 years, gosh, their savings rate had increased. Now, it dropped off after 2 years, but it made an impact. Show me a program that works. Here's one. Hey, their expenses, their credit card debt had decreased. It lasted for a year. Show me a program that works. Here's one. Show me a program that works. Try taking more high school math. Here's the program from, there's a study, Harvard Business School. Here's the relevant sections. Can good financial behavior be taught in high school? So says the authors at Harvard. It can, though not through traditional personal financial courses, which we find have no effect on financial income. Financial outcomes. Instead, we find additional mathematics training leads to greater financial market participation, et cetera, et cetera. Again, full study, but there it is. It's April 8, 2014. Depends on what you're trying to accomplish, depends on the definition. We talked about that. And, of course, the main problem is this meta-analysis we mentioned last year, big-time study that basically combined all of these studies, put them all in one pot, and basically said that there was a minuscule correlation between financial education and outcome. Again, this is what's out there. There are programs that work. There are programs that don't work. And again, I defer to these links give you the data, and certainly you'll want to read that and come to your own conclusion, not just what I'm saying, but that's basically what they say. So, financial advisors. If financial advisors work, and that's what the chairman was talking about earlier, then what is the big question? Financial advisors and popping the big question. What is, at least in my opinion, the big question to ask of financial advisors. If the key to investor education, if one of the answers is having financial advisors, what, in my view, is the big question? Anyone? I'll give you a hint. Does that help? Do you want a vowel or consonant? Anyone? The big question to ask financial advisors is this. Yes, to whom do you owe your loyalty? Are you working for me or are you working for the bank? Have you disclosed conflicts? What's the deal? You know, not talking about suitability, not just suitable, but I have a relationship with you. We don't care about what Dodd-Frank says, don't care what the Volcker Rule says, don't care what MiFID 1 or 2 says, but basically, to whom do you owe your allegiance? And maybe even putting it in writing. No need to have a lot of legal mumbo-jumbo, speaking as a lawyer. What about this little one-page document? Can a financial advisor, can a financial person, can a banker, whatever the person's called in your jurisdiction, sign up to this? Can they sign this, including these last 3 bullets? I won't mislead you. I will provide conspicuous, full, and fair disclosure. I'll avoid all conflicts. I will fully disclose and fairly manage in your favor any unavoidable conflicts. Can the person you use, if you use a person for financial, could they sign this? Do the people in your jurisdiction, could they offer this up? More importantly, in the U.S. included, do the people in your jurisdiction think this is the deal? Hear me out. Do the people in your jurisdiction think this is what they're signing up to when they go see someone with my lifetime of savings that wasn't earned from bonuses and takeovers, but it was earned at a 50 and 100 and 200 euros at a time in back-breaking jobs? Do they think they're signing up for this? Can the financial advisor sign this? Should they sign this? Are they doing this? There's the key. Because if, in fact, gosh, this financial, be careful what you wish for. Financial education, yeah, I want to do that. I want that. That's turf. I want that, da-da-da. You know, be careful what you wish for because it might come true. Do you really want to take on training people as an educator and not as a regulator from birth to grave? You know, maybe yes, maybe no. But ultimately, maybe the answer to financial education comes from having not just competent advisors and having someone that knows the basics of financial education, but having people who are advisors that really do have the public and have that person's interest at heart. I call it a little prenuptial agreement. Those are probably good things to have, so I'm told. You know, the other way of looking at this is maybe the regulatory sweet spot with respect to investor education is making sure people are advised to frauds. You know, gosh, it's hard enough for me to manage my own finances, what little I have, and decide how to invest. But frauds and telling people about fraud alerts, et cetera, et cetera, et cetera, that, I call that a regulatory sweet spot. And again, great stuff by the UK. Just got on the website, a lot of research, really good stuff. Great stuff by the US SEC. Great material on their website. And full disclosure, great stuff by FINRA. Again, well, what do you expect? I'm an American. Great stuff. My former employer, FINRA, has some great stuff. Jerry Walsh has a tape does on fraud and affinity fraud, and really there's saveandinvest.com. Great website if you're looking for information as to what regulators can do and I think should do, in my opinion. So saveandinvest.com. Take a look at what Jerry says. I think you'll be very impressed with the tools, the calculators, again, that relate to detection of fraud. Well, finally, some quick thoughts with respect to content. Whew. I'm not going to make it. Here we go. Just put this out there. Just some things. There's plenty of content. I'm just going to click through these slides, let you read it. No need for me to respond to it. Here it comes. You know, just some great things. How can I compare investment fees? Look at that. You know, where does the dot go? 1% or 0.01%? Big difference in outcome. Decent? Yeah, sure. Again, content's out there. Content's not the problem. Yeah. Hey, everyone talks about how big the fish was they caught. What about this one? That's a minnow. This is how bad it can get. You want to invest in the stock? Maybe those people that said they don't want to invest, maybe they know something the rest of us don't know. Like, hey, I could put in $10,000, like the chairman was talking about, but this is today, and end up with $651. Yipes. I don't want to be responsible for that. Retirement, next big problem. What's the answer to that? Well, it depends on what. A lot of things, like how much do you really need at retirement? What's the rate going to be? What type of rate of return, and how long do you have? But given those variables, what do you think the answer is? Quick math? Per day. How's your and mine savings going along with that calculation? And then we have enough to retire. You know, if you're going to be spending this, again, now the other computations, if you're going to be spending this, then this is how long $1 million will last you. I showed this to some of the staff at IOSCO yesterday or the day before, whatever it was. They said, Gary, why are you so negative? I said, I'm not being negative. These are just the facts.